Hi, welcome to the Market Alert for Tuesday, the 22nd of March 2022. A lot to get through today, a lot of news. So let's get on with it. Bonds battered, stock slide as Powell channels Volcker. For those of you who don't know who Volcker is, he's a former Fed chair going back to the 1980s, and he increased interest rates to around 20%, if I remember rightly, to try and combat inflation. And now Powell has said he's going to do whatever it takes to actually batter the inflation rate down. So good luck with that, particularly as crude surges. We'll look at that in just a moment. We then move on to a war footing. US unexpectedly sanctions China. This is going to go from bad to worse. This is not going to be over in a couple of days, as the media would have you believe, and there's a reason for that. All wars are bankers' wars. And I'll put a link to a brilliant video from 2013 that shows you why this is the case. It's a brilliant documentary, and why this ends with a lot more, unfortunately, a lot more war before we go back to anything that remotely resembled normal. UK can hold out as long as the West keeps supplying arms. They weren't going to be involved, and now we're providing arms. Same in the US sending Soviet anti-air defense systems to Ukraine that were secretly acquired. And then we move on to food. World Economic Forum warning overcoming food crisis. Of course, Klaus, I'm sure that you've got something to do with all of this. 3,000 Canadian Pacific rail workers strike as fertiliser shipments grind to a halt. Fertiliser has gone from £60 a tonne, if I'm not mistaken, in this country to £600 to £1,000. So again, the knock-on effect for food inflation is going to be huge. And in the US, there's severe drought conditions that threaten winter wheat harvest in the US as well. Stock up while food prices are relatively stable, because it looks like things are about to get really crazy. Something I've been doing for the last few years. It was en route. April 2020, but in reverse. One bank warns we're about to witness a historic short squeeze eruption in oil. They're talking about the COVID crisis when crude oil went to minus $40 a barrel, and then it was squeezed to the upside. This is a different type of squeeze. But again, you'll see in just a moment how much crude oil has moved. Oil spike has yet to spark gasoline demand destruction. So what they're basically saying here is that consumer hasn't really noticed it yet. Well, I beg to differ in this country, because I certainly have, and I should imagine a lot of people have as well. Plus, they've got the energy increases coming in April of a 50% rise and 50% in October as well. And then finally, Goldman admits Saudi-China oil trade signals erosion of dollar status. And again, the documentary that I alluded to earlier speaks of this, where the petrodollar became king. And then, of course, it wasn't, with Iraq, Libya, and Afghanistan. And, of course, Ukraine is ultimately about energy as well. For those of you that remember, under the Obama administration back in 2013, the last spat that happened in Ukraine, the then vice president was Joe Biden, and his son was awarded the chairmanship of the natural gas company, paid $1 million a year. Look it up, it's on the internet for those of you who want to know more about it. So no surprise there whatsoever. On a slightly different note, I've added a quick catch-up video at the weekend into the trading examples area of the members website. You'll find that from the main page. Let me just log in. So if you come down to tutorials and then down to click to view live trading examples here, this will take you to the page where you can actually view them. Okay, let's have a quick look at the news that's out today, Tuesday. We've got Lagarde speaking at 1:15, and FOMC member Mester speaks at 9 p.m, so after the markets have closed. So no news day today. The market's got to make its own direction. And speaking of the markets, yesterday the Dow, quite a quiet day compared to what we've had for the last 5 or 6 days, and fairly quiet overnight as well, which you can see there, but still struggling with the 89% retracement at this time. In the 30-minute chart, you can see there that we've got the market spiking up to Friday's high before then selling off from 230, moving all the way back down to the S1 where the market found some support and then moved back when Powell spoke. So again, very quiet overnight. Well, really quiet overnight actually. Only a 50-point range there for the Dow, which is unusually quiet to what we've seen over the last few weeks. In the German DAX, we have a similar picture, very quiet yesterday for the DAX. The market, again, also the same as the Dow, struggling with the 89% retracement, closing below the 5-bar moving average yesterday as well. And we are overbought in this market, so we could see a bit of a pullback at some point. Let's just draw in a few just in case. There's your 38% retracement, which ties in more or less with the low that is automatically highlighted off this bar. But at the moment, the market looking like it wants to move to the upside. And if there's nobody selling today, and depending on what the narrative is from the mainstream media with regards to the war between Russia and the Ukraine, the market is likely to attempt a move back towards the upside. That's what it's showing at the moment. In the 30-minute chart for yesterday, we started off moving to the upside and then we had a retracement. We were overbought with divergence, which is automatically highlighted here, meaning that prices were higher here than the previous high, but there was weakness. The momentum was starting to switch, which it did, and then prices moved lower. We then went to oversold, where the market failed to react on the upside because the Dow opened and sold off, and this dragged down the DAX. Then we had a retracement overnight, a double bottom test where we've been oversold, and the market has just come back where we've had an overbought and now free to move to the upside and stay above the DP there. In the 5-minute chart for yesterday, again, it was really quiet, especially after the open. The market had a bit of a move to the upside after being oversold. Demand at the averages moved up, and then we had a sharp pullback there. You can see how they brought the market back. It just spiked down, oversold, and then the market moved back to create a double top that we have here. Then it was overbought with divergence, and the market moving lower till it was oversold, then moved back till it was overbought, and then inside of here we've got an 89 supply crossover, etc. And then the market moving down with the Dow, and moved down quite nicely. Again, you can see the momentum coming back there, and eventually crossing over and closing back above the 5-bar moving average for a second time before moving back up and then finding some resistance there. Unfortunately, my electricity went off at this point, and then the internet went off, and it's also been off all night as well. So if you're watching this market alert, you're lucky to actually have it at the moment. But overnight, 5-minute chart moving down, you can see this. Well, this is late into the evening. Actually, this is the Dow evening session that this is on. And then overnight is here, where we can see the new set of pivot points, new DP there, daily pivot. So the market's again having sold off down here. Again, we've got a divergence there. We've got demand coming in, and the market making its way back. We became oversold and then back to overbought as well with divergence in the stochastics, and it's moved back up to the DP, where the market is currently holding quite nicely. The futures market opens in 15 minutes time. In the yen, we can see that we've got prices in the daily chart trading up to highs to the left, holding there at the moment through the 89 yesterday. Just to the 89 yesterday. But overnight, prices driving quite strongly there. If we have a look at the 30-minute chart, we will see this. You can see there they've been up all night, about 70 points on the Japanese yen. A good move yesterday on the yen as well, after becoming oversold at the BRN with demand and a crossover before moving up, and then early evening, late into the night or into the rollover to the new day, you can see the market has moved up. And in the pound, which is showing a different picture, it's quite weak. It's been sideways and now is moving down. You can see there 38%, just below that at the moment. I'll just widen this out so you can see a bit more. So the pound showing a bit of weakness there. And watch these fibs for a move back to the downside there. Pound fairly weakish there compared to the dollar yen, which is making those new highs, which of course it is interesting because the dollar's also moving higher as well. So, well, a dollar index certainly. Anyway, the pound in the smaller time frames at the moment, we're at yesterday's low. If this is broken, then obviously we're going to move down to the 50% and then down further through the fib retracements there. So back to the 30-minute chart. So that's where we are. The market moving up yesterday after being oversold and then becoming overbought and then switching. A bit of support there late on in the evening. The market failing to move off the oversold conditions, becoming overbought in a sideways move, and then switching with the crossover, and down we go to the low where we're currently trading. And finally, in the metals, let's have a quick look. Starting off with silver. Surprise, surprise. They didn't move the market lower yesterday, but then with the big move up in crude oil yesterday, the market managing to find a reason to move higher, obviously because of the inflation situation, which is bullish for the metals. And we're up on the overnight as well, but I can't get over how tiny these moves are compared to the down moves this market makes when there is either a ceasefire or the inflation issue is engineered to make it look like it's not as bad as it is or going to be. But at the moment, they're allowing the market to move up, albeit in a very, very tiny amount. Same for gold as well, but the 30-minute silver, again, you can see the LBMA open yesterday, market slammed down and then brought back, and at the moment we're starting to see yesterday's high being compromised with silver starting to make its way back. I would imagine that the DP will be tested this morning before the market then opens on the LBMA, and it's slammed a bit further down to the 200 MA in the 30-minute and then allowed to move back once more, but it is taking a lot more to slam it, that's for sure. Crude oil continuing to move to the upside. Big move yesterday. We're up to $117 a barrel. We're up $20 a barrel from just a few days ago, which you can see there at $97 a barrel, 98, 117. So yeah, 107, 117 there. So $20 a barrel up again. So no wonder we've got record highs in UK fuel prices. In gold, also sideways to higher, but not breaking any records at the moment. And the dollar, again, attempting to move to the upside, putting downside pressure on the pound, but not on the yen. Okay, that's it for this one. There's a lot in this one. And right, let's see what happens today. No main news or economic news, so it's all down to the media narrative to decide what they're going to pump into the markets and how it's going to be used by the bankers in order to move the market in the direction they want it to be moved in. Okay, that's it for this one. As ever, thanks for watching. See you in the next.